Welcome to Bears in Exile. Today is May 24th. We're going to be looking at the Dow, the SPX, the VIX, TNA, UUP, FXE, GLD, and SLV. Here on the daily Dow, you can see that we are still in the channel. Secondaries have room to move. Not a lot, but they do have room to move. We said yesterday that we should be going sideways to sideways up. And for the majority of the day, that's exactly where it was. By the end of the day, people wanted to get out, and we have this inverse hammer. So that does increase the odds of having a little blip up, but the short-term moving averages are even more expanded now. They are almost completely in the bar, putting the hurt on it. It is beginning to weaken and compress. This does look very bearish. We do have room now between the candle and the bottom of the channel. We have mentioned that we have a target just below 12,300, and that could actually be met tomorrow. On the SPX, don't have as much room between it and the bottom of the channel. We also have the inverse hammer. However, the short-term moving averages have completely entered the bar and are really doing some damage to it. It is not nearly as fat as it was, and it is compressing rather quickly now. Secondaries do have some room, and we do have that target still at 1305. So it'll be interesting to see what happens when it does come into contact with the lower channel line again. Now the VIX, we did say that it would have been appropriate for it to be sideways to down, and we do have this hammer, and it is slightly, down small. It wasn't sideways, but the bar is just falling apart. We do have complete penetration of the bar and partial exit by the faster moving averages, and all of our secondaries either have lots of room to move and are pointed up, with the exception of the RSI, which is down slightly. But this is a very bullish chart, especially once this bar completely disintegrates. And TNA. And TNA was sideways, have a big nice red candle. We do almost have complete exit by the short-term moving averages of the bar, and the bar is almost totally destroyed at this point. So it does look very bearish. The secondaries, of course, are very low. They don't have as much room to move down as the Dow or the S&P, and actually the RSI is now starting to tick up along with momentum. So I don't know how much life will be left in this one before we have some sort of correction to fix some excessive separation of the short-term moving averages. But that would not be a bad thing. I mean, resetting is good. And UUP, and this is very interesting. It was hit the bar yesterday. It came back out of it today. This should have been bullish for stocks, and yet they still closed down. We have a hammer, a very ugly, wimpy, barely meets the definition of hammer. It is putting the hurt on the bar. Bar is compressing. I still think that having a blip to the upside on the market, which would be a blip down right here, is called for, but it's going to do what it wants to do, and the news is going to drive it. So this is very interesting, though. This should have been a good thing for the market today. And then FXE, you can see that it did go up today. This should have been positive for the market. So that is very interesting. All the secondaries are very low and they are trying to tick up. So we do have the bar falling apart. We do have halfway exit of the bar by the short-term moving averages. We do not have an uptick yet. So and GLD, we were talking yesterday about it not having complete separation for a textbook guppy entry, and we still do not. We still have a partial flatline, and so we do not have an entry signal as of yet, but this certainly looks good, and if we do get that, it'll be very nice indeed. And last night we had talked about silver, saying that if we had an uptick, it wouldn't do us any good because it would already hit its target. And sure enough, that happened today. Got the uptick, it already met the target, and this is going to be very interesting. Everything is curling up for silver, suggesting that it will go back up. The long-term moving averages are going into a flat line, so there's not going to be much of anything to stop it. Besides that, it was a bullish bar before it started to compress. So silver is looking very, very nice. And that's about it. The charts do continue to look bearish, and I'm still looking for that sideways to uptick to happen, and maybe tomorrow that'll happen, maybe it won't. Maybe it'll go down and take care of our targets and then just zoom to the upside. We don't have enough data for that yet, but that certainly is possible. And for the fear to get blown out in one big ugly red candle, even if it was just intraday, would be appropriate. So, as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.